All right, what's going on, everybody? It's Sunday, 10:45 a.m., August 23rd. My name is Amal. I have Faisal, our head equities analyst, on the call as well. We're going to be talking about the equity markets today. Lots to talk about. A lot has happened over the past week. Bloomberg itself has written this massive article on the bears are going extinct in the stock market's $13 trillion rebound. And I got Faisal on the call to discuss all the things that are happening in the market here. So welcome, Faisal.
What's up, man? How are you doing?
Doing fantastic. I'm looking forward for the week ahead because it seems like we've got some big headlines coming out, Bears getting exhausted and, all this rebound that's being kind of, broken up because you talked about last week that tech is potentially slowing down. Are you still holding that theory?
Oh yeah, I'm definitely in the camp right now. And I've been a guy who's kind of played the middle throughout the past, I think 2 weeks. There was about a week, a month ago where I kind of got scared and I thought the market was going to sell off, and then I kind of sold a lot of my positions. And when I got the all clear sign, I had to re-enter the market and buy positions like AYX, MyTech, and all this other stuff. Um, but I also had a hedge on with XLK. So I had kept a hedge throughout I want to say the last 3 weeks or 2 weeks in XLK, just to balance out my long tech positions. But now I've completely, gone into full short mode. I'm like it's not a hedge anymore. I've increased my XLK position to a full on short position. Added some options in there, puts to the downside. I'm really feeling bearish about tech, and a couple reasons why. I discussed it in the video Friday, but I'll give you guys a little rundown if you haven't seen it. Just the narrowness in tech has come to a point where I don't think we've ever seen anything like this before. So on Friday, if you just looked at the broad indexes, you would think to yourself, wow, this was a fantastic day. The Dow was up 200 points. NASDAQ was up 0.5%. S&P was up 0.4%, I believe. And everything looked great. Everything looked broad. But when you take a look at the leadership, which was tech, obviously, specifically big tech, you had names like Apple go up 5% and add $100 billion to its market cap on no significant news. So, there was no upgrade, no anything like that. It was just a complete pop, probably a lot of short covering, and then, a lot of retail chasing at that. But once again, if you look at that day, it was mainly just Apple, Tesla, and Nvidia that were really driving tech in general. And there were a couple other stocks that made all-time highs on Friday. I'm not going to discount that. In other sectors, it was very sparse. Like you had some winners, some losers. But once again, just looking strictly at tech, you had Microsoft, Shopify, Amazon, Roku, Coop. A lot of these leaders in the tech industries, they were all down Friday. And so you're not seeing that strength that used to translate when Apple went up. That usually had some leadership momentum that would carry at least into stocks like Microsoft and Amazon, which are its peers. But now you're starting to see that falter. It's pretty much just a rush into Apple, and even stocks like Amazon and Microsoft are getting left behind. Now, once again, these stocks have not broken down, so it's not like, it's not for sure. Like, I think there's still a chance that I could be wrong, but I think we're coming to a point where when you see this type of euphoric rise in Apple, $100 billion on no news, Tesla, another stock, and I think it has to do with the stock splits. Like those two stocks, I mean, Nvidia is one stock that I think can go up 100 points from here, 200 points from here. That's a fairly priced stock for the long run. But I think Apple, with the concerns of the iPhone shipments, and Tesla with overvaluation concerns and output concerns, I think those stocks, the fact that they have stock splits really tells you who is buying these stocks this high. And I think that's a little bit dangerous. So once again,
So let me interject there, Faisal. I mean, I'm right there with you. Listen, I feel like this party is coming to an end, and I truly believe that most of these stocks are clearly overvalued. You're absolutely right about Apple. Pushing up, adding $100 billion to their market cap. No significant news. It's not like they came up with some innovative product. It's not like the economic shift has started to take place, nor have we come up with a solution to the coronavirus to warrant that maybe people feel comfortable going out, buying more products or iPhones, etc. But just to play devil's advocate, okay? Now, of course, we do see these headlines coming out. Bears are going extinct, and the fact that it is not paying to be a bear. This is usually the time where I feel like, okay, with all these massive headlines coming out, maybe the market is topping. However, for the person who has been looking at the market for the last several months, and he or she has been looking for a big pullback, they have not gotten it because the Fed has effectively told you that we've got a floor on this market. No matter what, we got its back. How can that person reconcile with the fact that every pullback won't be bought going forward, and there's more and more money waiting on the sidelines? Like, what would you say to a individual investor like that?
So someone who is waiting for a pullback, like, are you trying to say when the pullback happens, is it okay to buy it, or is it uncertain?
Well, I think the people who have been waiting for a pullback, right, to any degree, any large degree, they haven't gotten it. All they've really seen for the past several months is the market's been getting bought up. They see that, the Fed has effectively told everyone that they have a backstop on this market. So why is it that any person right now should believe that maybe this is the top?
Well, I think you can look at it from a technical perspective. Like I just mentioned, the leadership is getting much more narrower. It's all these small micro signs that I believe happen before the inevitable drop. If you take a look at the S&P, it's right there at all-time highs. It really hasn't cleared to a really powerful extent. It hasn't confirmed on my formula that it's broken above the all-time high and that it should continue to break out. And I think the type of narrowness that we're seeing at these levels in the market, I think it's more likely than not that you're going to see profit taking. I don't think that the pullback that we do get will be long run. I think it could be 1 to 2 weeks. But I think volatility is something that will kick people right in the face. I think it's going to be massive drops that will cause people to change their sentiment on the market. Exactly as we've seen throughout this entire quarter, this entire year, price changes sentiment. And I think when you see the market drop 10, 12% in 2 or 3 days, people will make up things like, oh, now it's the stimulus that's being held back. Congress is not doing enough. And so now this is why the market's going down this much. And until they get something passed, this market will continue to go down. And even though there's no stimulus bill now and Congress is like not even doing anything at this point, the market's still holding up. But I think once again, price will change sentiment. And ultimately, when you do get that pullback, you have to fight against that price sentiment, especially if it comes down to good technical levels and you start to see the leadership firm up again.
Okay, fair point. I would say, especially looking at the S&P 500, the way you start seeing these tighter candles right here, the tighter candles, and then less and less volume. I was reading, I think last week, that the S&P went up even when 75% of the stocks within the S&P 500 actually closed down for the week, which I thought was really interesting because, again, this goes to show that the broader tech stocks, that the more heavy weighted tech or high growth stocks are really pulling up these indices. Is that something that you agree with?
Yeah, but isn't it amazing how we've been talking about this point for like 2 months now and the market has continued to run up? And I think that that's part of the entire formula, is that in the beginning 2 months ago when we did see this exact same thing, we were like, oh, wow, this must mean that there is broad weakness in the market. This S&P cannot continue to go up. And I think it's really proven people wrong. And once again, it's price changes sentiment. I think people have started to ignore the fact that, yeah, this market is narrower, but maybe it's okay. Maybe it makes sense. And I think that's where we get into a dangerous scenario. And I think that's where we are right now.
Well, it's kind of like Keynes said, the market could remain irrational longer than you can remain solvent, right? Mm-hmm. And so it's right now, it goes along with this article, which Bloomberg posted, bears are going extinct in the stock market's $13 trillion rebound. Put to call ratios are, some of its lowest levels that they have been for the last, I think, 5 or 10 years. we know that the short interest in the market is significantly lower. So this seems like the perfect time, and I'm agreeing with you, is that, hey, once you have exhausted the bears out of their capital, it's now time for the big profit taking for larger funds and institutions to take that profit, take some money off the table, and then start potentially, shorting the market.
Yeah, I think that's totally what you could see. I mean, that's going to be the fuel. If this market comes down, I think that's going to be the exact scenario. Especially if it comes down this week, right at the all-time high resistance level. That's going to be a clear sign.
Yeah, and that would be a very bad sign, because as soon as you approach that all-time high level, if you start getting those big, big impulsive corrective candles on the way down, then you know that, okay, well, there are some big sellers waiting.
Yeah, that no doubt.
Let's take a look at bank stocks real quick, because I know banks are still kind of suffering, right? XLF, JP Morgan Chase. I mean, what do you make of that? Like, we spoke about this a little bit, a couple of weeks ago, that banks are not leading the recovery. We know that value is not leading the recovery. So do you think that while this tech, quote unquote, bubble might be, waiting or popping, do you think that might spell a rotation into value, into financials? Or do you think that it's going to be a broad market sell-off?
That's great that you mentioned it, because I am definitely a guy who has tried to believe in value before it had that run up a couple weeks ago. I had a nice 1 or 2 weeks, and then it just completely gave up all the gains. And so I was back 2 weeks ago. I was someone who believed that tech was looking shaky. I still had my coop short on, and my XOK hedge on. I was still, thinking, okay, these leaders haven't broken down yet, but if they do start to pull back and trade in a range, I think money will move into the value stocks, and that would propel the S&P to all-time highs. Well, looking back today, I was completely wrong. It was actually Apple and Tesla and the main big leaders that propelled us to the all-time high levels, and value ended up just sinking once again. So I've been a believer in value, and it's not been a position that I've liked, and it's one that I don't really think that it's going to see that rotation that I was hoping for. I cut a lot of value exposure, I want to say Wednesday, but the majority of my portfolio in longs is pretty much almost all value stocks. But once again, I really think that we are not going to see this rotation. If we do get a pullback in tech, I think it's going to be paralleled with the pullback in value sectors as well. They'll just come down to the lower end of their support ranges. Like you can see JPM, if you pull up the chart. Oh yeah, you can pull up IWM. That's cool. Yeah, IWM is the quintessential value index or whatever. It could pull back somewhere to 115, maybe 120 or so, because once again, value is the weaker side. It's still weak as long as we're going through this crisis, and so yeah, I could say as long as the market was going up and continued to want to grind higher, there was a case to be made that value could see some rotational buying. But if everything starts to look weak and people just want to profit take across the board, I just can't see money moving into value yet. Now, I will say I think some value sectors will outperform once we do get a pullback. Like I think the industrials are going to be a pretty good winner once we do get a pullback, and they started to show a little bit of separation between their financial peers and the energy peers in their whole value sector group. So industrials would be one that I would definitely pay attention to, and hopefully I'll try to get into them more if the market does pull back and value sectors pull back with it.
Okay. Yeah, something definitely that our viewers should be paying attention to: industrials and financials, going forward for the weeks ahead. It's possible that they may get, some rotation of money, but I think, as Faisal said, don't bank on it just yet. Don't try to time the bottom, if you will. You talked about your video from Friday. I do hope our viewers go check it out. This is, I think, pretty solid video. I like your face right there.
I know. What is that? That's a
perfect surprise. There you go. So make sure you guys check it out. Faisal's been making these videos Wednesdays and Fridays by himself, and pretty solid content in there. Make sure you hit the thumbs up or join our Discord channel. The Discord link is below. And then, of course, we do have our Advantage membership, which is on www.thealphatrace.com. Make sure y'all check that out, because this is where Faisal posts all his updates. every single day, I think opening and closing, and sometimes you have midday updates where I think they're pretty helpful on, what you're seeing in the market. And of course, it's stock alerts, and he's pretty active in the stock market chat as well. So if you guys are interested in trading stocks, make sure you join our community. So let's move on. I want to check out Tesla specifically because that's been the big hot topic lately. The inclusion of Tesla in the S&P 500, lots of, possible passive index flows from asset managers that are going to be flowing in due to that inclusion. And then, of course, the stock split, right, that it's going through, correct?
Yeah, I think on the 31st, Apple and Tesla are both splitting their stock.
So, I mean, what do you make of that? Like, do you think that's all priced in, or do you think that there's probably going to be another big, sort of rush into Tesla?
Man, I don't know because I can't believe that if you're someone right now who believes that buying a stock before a stock split will somehow increase the short-term value of your portfolio, it will not. Now, it could pay down in the long run if the stock ends up getting back to its price that it's at now, because then let's just say it has a 1-for-4 split. If you had one share beforehand, and then 2 years later, you now have 4 at the same price, and obviously that's good in the long run. But in the short run, it's not going to be anything different. And I think this type of rush to buy scenario that we're seeing in the stocks that are splitting, like Apple and Tesla, it's really dangerous. And I think it shows this type of euphoric chase for easy money that's become so aware in this market, that's so relevant in this market. And I think there's a lot more buying power in the retail investor group than there ever has been before. And I think they're a lot more active than ever before as well.
I saw this really funny joke on Twitter about there's this CFA certified, financial advisor, and this random dude on Twitter who is just a regular Robinhood trader. And the CFA guy was trying to explain how stock splits work and everything, and the Robinhood he was just like, well, I don't really care. I feel like, if it's cheaper, I'm just going to buy more stock. And the CFA guy was like, oh my God, I cannot believe that these are the people that I'm dealing with who are actually outperforming, me and my peers in the market. This is what, people are dealing with.
Been shorting the market the entire time. He's been losing to this guy.
Exactly. And I think, I feel like that is truly the epitome of what's going on in the market is all rationale and all sense of, what used to work, what you learned, say, to become a CFA, what you learned as a trader for several years, everything is sort of being rewritten or being thrown out the window. And honestly, in some ways, it's the regular Robin Hoodie who's performing well because the dude is buying Kodak and Nikola or whatever, and they're making massive gains.
Well, yeah, hopefully they're selling it at the right time. Like for me, I think this type of euphoric rise is in these stocks that are splitting is a perfect cover for institutions that have a large amount of Tesla stock or Apple stock, because now they can unload as the demand keeps flowing in and the demand still increases. Like I was watching Apple throughout Friday, and oh my God, I've never seen that stock move so fast in my life. Like that stock, that 100 billion gain was the fastest 100 billion gain I've ever seen. And it would just move in chunks up and down, up and down, up and down. I was like, holy crap. By 11 o'clock a.m., that stock had already surpassed its average volume, like 50-day average volume. And I was like, holy crap, there is so much rush to either short, like cover your short or buy or whatever the case may be. It just feels like people want to buy the stock before the short because they truly believe that it's going to be like, it's either going to be bought even more once it's cheaper. Like that's the rational mindset, is that, oh, if the stock is splitting and it becomes cheaper, then obviously it's going to see more demand because it's a cheaper price, but it's the same type of company. That's just not how it works. And I think the fact that it's cheaper and now people have more shares that they can sell, I think it makes capital allocation a bit easier to do with stocks like these. And I think it actually makes the case for more selling. I think you're going to see like you could see a lot of selling after the Tesla stock because now people can proportion their portfolio a bit better.
Yeah, I totally agree with that. The idea of stock splits and the stock itself being cheaper to buy effectively means that it is much better for institutions to sell because it's at a cheaper price, and average retail investors thinking, oh, wait a second, instead of me being, not being able to afford Apple at $500 a stock, Now I can definitely afford it at, 100 or 125, whatever the split is.
Yeah.
Um, Let me move on to a different topic, which is somewhat related to the macro sense of what's going on in the dollar side of things. But recently, I don't know if you've been paying attention to this, but the Turkish lira has been, oops, TRY. The Turkish lira has been getting significantly weaker and weaker against the US dollar. And Turkey has not been able to get their hands on more dollars. Okay. Many other countries, I believe, are going through a similar vacuum of dollars. Now, with the dollar being bottomed where it is right now, okay, and this is, again, the dollar has been completely selling off for the last several months, and it's hit, oversold levels on the daily time frame. I'm pretty sure the weekly time frame as well. And so, it's coming to this key trend line that has been holding up since 2011. I was telling some of our members, our viewers, that whenever I hear talks about the dollar selling off or the dollar getting weaker or the dollar, potentially, not being the reserve currency or anything, that's usually the time where the dollar is bottoming and it's about to just rip. So how that relates to the stock market is in two ways. Number one, I think the Turkish lira example is pretty good because what you're effectively seeing is Turkey, a country that has a lot of US dollar debt, not able to get their hands on the dollars, struggling in its own economical sense, and the dollar ripping against the lira. They're going to want dollars, and so are many other countries. Turkey has also disallowed some of their citizens to not own gold, meaning more and more people are now flowing into Bitcoin because Bitcoin is actually a big thing in Turkey. So it's either that the Turkish government gets their hands on dollars or their own citizens start escaping into gold, into Bitcoin. And I don't think they want that. So this, I think, further makes the case that the dollar, in my opinion, is possibly coming into a bottom. And if it's coming into a bottom and the equity markets are at the top and gold is at the top, well, this is the perfect time where profit taking could enhance the view of the dollar starting to push back up and we start seeing a broad market sell-off. What do you think of that theory?
I'm not a currency guy by any means, but I think what you say makes a lot of sense. You definitely got to talk to me more after this video about the Turkish lira and everything like that. But for the most part, yeah, I definitely think that if that trend line has been holding since 2011, which was the last time we had that major dollar crisis, I think from a technical perspective, it makes total sense. Exactly what you're saying.
Yeah. So this is, I'm coming to this point of inflection where I'm looking at the dollar. And to be honest, I really thought that the dollar was going to make it to my big support level around 91, because that was one of the big levels back here from September 2017 and this rejection right here around March 2018. I was thinking, okay, maybe we come back to test that level, but it's also possible that this trend line holds and we start pushing up. But anyway, we'll see. That was just an interesting story I wanted to tell our viewers about, because in many ways, I think folks need to understand that whether it's crypto, equities, bond markets, the FX markets are the biggest markets in the world. It's not even close when it comes to the equity markets, and it's not even close when it comes to the bond markets. You have $3.5 trillion in turnover every single week in the FX markets. So for sure, if you start seeing signs of weakness in emerging markets versus the dollar starts ripping up, I would probably say there's going to be some bigger impact on the equity markets, potentially selling off, especially if the equity markets are already, at key all-time highs. So anyway, I'll let our viewers sort of do their own research, but just something I wanted to mention. Final piece of important news, Faisal, is one of our members wanted to ask about is, Kim Jong-un is in a coma. North Korea might be passing power to his crazy, wild sister. Do you think that there's going to be any ripple effect into the markets with this news?
Um, you may get like a day where the market sells off, but in relation to whatever happens, I mean, I don't even know if it's going to be. Will the market rally if she becomes president? Because could she be better than him? I don't know.
No,
Uh,
no. So supposedly she's even crazier than he is.
you're kidding me. Come on, who's saying this?
I swear that's what people have said. I mean, well, it's not people, rather it's the defense officials who have mentioned this.
Damn. Okay, well that's a little something. No, I mean I don't think it's ever anytime North Korea has done anything, it's never affected the market for more than like 2 or 3 days. And that's when they were launching missiles over Japan. Okay, that was a serious thing. But ultimately, it didn't really mean that much to the market. Investors kind of felt like everything would be fine, and we stand here today with everything fine. So, no, I don't think there's going to be much ripple effect. You may once again get a day or two of selling, but that's probably a buying opportunity in I'm not assuming that the headlines are terrible, but for the most part, it should be a buying opportunity.
Yeah, I think I mentioned something similar, which is, first of all, I don't. North Korea is already a non-player in economic terms, unless they start, crap with South Korea, or they start these war talks or nuclear arms talks again. Yeah, it might be possible that it shakes out the markets, but I think I'm kind of there with you that it might just be noise and potential buying opportunity. Is there anything else you want to talk about, Faisal?
No, I mean, for at this point, I would give like my stocks of the week or whatever, but I really feel like this market's about to come down. This is going to be the week where we see a pullback in final pullback in the market where we'll get 2 consecutive days of at least very negative closes and the buy the dip crowd will ultimately be defeated because I think when we get the first sell off day, I think there's going to be a rush to buy assets because like I said, the volatility will be high and the market could pull back 3, 4, 5% in a day and that's attractive to some people. But once again, it's really all eyes are on tech this week, and definitely all eyes are also on value sectors as well to see if we get that rotation. So those are the things I'm looking for throughout the week.
Perfect. All right. Well, I think our viewers have enough information to make some informative decisions through the week. Thank you guys so much for watching again. Make sure you hit the thumbs up, leave us a comment. Anything else you want us to cover, please leave it in the comments below. There's a Discord link so you can join our Advantage membership or the free side if you want to come hang out. Well, until then, take care and we'll catch up with y'all through the week. All right. Cheers.
Peace.